This conference will now be recorded.
Good evening, everyone. I am Pete Panito, Business Development Contact here at First Northern Credit Union with tonight's webinar, Becoming a Homeowner. We are lucky enough to have two guests presenting this evening. Our mortgage loan officer, Sandy Federici, who has been with First Northern for 25 years and still loves helping members finance that perfect home. And we have local realtor for over 30 years, Mary Summerville. Mary is consistently one of the top agents in her field and loves guiding first-time buyers through the sometimes confusing home buying process. Thank you for sharing your time and knowledge with us. This is part of our monthly financial wellness series for our members as well as the community at large. We have recently partnered with the City of Evanston to present weekly financial webinars as well. If you are interested in that particular schedule, let me know in the chat box and I will email that information to you. I will be recording this session and we will email follow-up materials tomorrow. Throughout the seminar, if you have any questions, please ask them in the chat box. Sandy and Mary will answer them after the presentation. With that being said, I will turn the microphone initially over to Sandy Federici. Take it away, Sandy.
Hi, I just want to thank everyone for attending. I appreciate taking the time to listen in. Hopefully you'll find this information helpful. So we're going to start with the first slide, which is positioning yourself for home buying. There are steps to home ownership, and we'll go over them today. If you have any questions, again, put them in the chat box and we'll answer them at the end. To start, you definitely want to have some savings, save for a down payment and other costs. You want to look into your credit report and make sure that your scores are as good as they can be. So this way, there's certain programs that may benefit you more with a higher score. Your interest rate will be better. If you don't have 20% down, your private mortgage insurance will be better with higher scores. So there's different ways, and we will definitely cover all that today. Getting pre-approved, you would want to get approved at least maybe a couple of weeks before you're going to start shopping so that you're ready and you know what you need to do. You want to choose an agent. Let's say a realtor, and Mary will cover most of that. I'm used to talking about it, so I'm going to try not to say too much and leave that for Mary. Search for a property. Choose property, submit an offer. Offer is accepted, the pre-closing period, signing paperwork at closing and receiving your keys, title being transferred to you and recorded, and then you move into your new home. Sounds really easy, but we're going to do this now step by step. So you're going to start by saving. Easiest way would be to maybe put some money aside if you know this is something you're going to do in the next couple of years. Get a separate account and just use that for your down payment and closing costs. So put money aside like every payday. Maybe you can do auto pay to do that. And this way, after a short time, you'll have some funds saved for a down payment. You also for closing costs. They could range anywhere from a few $1,000s to $9,000-$10,000. So once you find like the area that you're looking at and your kind of a loan amount and purchase price, we'll be able to break down the closing costs a little bit better for you. There's also a post-purchase reserve fund. So not every program you need to have reserves, which that means is this isn't something that you're going to use for your down payment or closing costs. This is just funds you're going to have available for after you close, just in case it's needed. If you're looking at multi-units, you have to have reserves. If you own few properties you have to have reserves. So there's different reasons why you may need to have these reserves, and they may only be maybe 6 months worth of payments, principal, interest, taxes, and insurance, and they can be in a savings account, they can be in a checking account, they can be in a 401, as long as it's something that you have access to. You might want to save for after you close for repairs, renovations, and some new furniture for your house. As far as repairs, if you're looking for that type of property, you may want to look at special loans for type of more like home improvement type loans, something like that, renovations. But if you're just purchasing something that may just need a little change, a little maybe paint, things like that, then that might be something that you'd want to make sure you have those funds for after closing. Or if it is a property that will need additional work done, you may want to not put as much down and keep some funds for that. Ways to save is, like we discussed, regular savings. You can also get a gift from an immediate family member. If you do that a couple of months before closing, put it in your account, we wouldn't know where it came from. But we are going to ask for 2 months bank statements. So if you are getting a gift, the person that is gifting you those funds will have to prove that they're gifting it to you and sign a letter. They'll have to sign a gift letter stating that they are gifting it. You can also sell assets. You might have a car. You can go on Craigslist, sell something. If you do that, though, you want to make sure if it's not 2 months from the time that you're going to be starting an application, you want to keep a paper trail of everything, because we will ask for, like I said, 2 month bank statements, and any deposit, large deposit on there, you're going to need to show proof where it came from. So I mean, if it's your payroll, things like that, that's fine. If you got your income tax check, things like that, that's fine. But any other deposits, you will need to prove. So if you are moving money around from account to account, that's okay, but we're just going to need to see 2 month bank statements of all accounts. Credit report and scores. As far as conventional financing, to get the best interest rate possible, your score needs to be at least 740. So not saying that if it's 720, you're still not going to get a good rate, but it goes by 740 and above. For conventional, you do need to have a score of at least 620. Not long ago, we were able to do FHA loans with as little as 580 and also 620. Recently, the company that we use for our FHA loans, they raised that minimum credit score to 680, which I'm sure it's going to go back. They're going to allow it to change as soon as things get a little bit better, and they're going to feel more comfortable lending out money. But so right now, 620 or above. It's always a good idea to maybe check your scores, check your credit, go to annual credit report, just in case there is something that's inaccurate. This way you can take care of it before the time comes when we pull your credit. And also, when you're looking at your credit score, what you're going to see is going to be different from what lenders pull for mortgages. We pull 3 different reports, and we use the middle of the 3 scores, and they are much more detailed than anything that you could see yourself. It actually will tell us if you make minimum payments, if you pay over. So again, I mean, what you're going to be looking at scores may not be what we pull, but at least you'll have a rough idea. Tips to bring that score up. Of course, make your payments on time. If you are delinquent within the last 6 months on anything, even if it's a small credit card, that's really going to hurt your score. So you just want to make sure that you keep your accounts current. If you have credit card debt, just if you can keep it at least half of what the credit limit is, that'll also help your credit score. Probably not a good idea to start closing credit cards, because when they're reporting on the credit report, it doesn't really read if you're closing that or if the creditor's closing it on you. You definitely want to limit your credit application. So if you're at a store and they're offering you money off if you take out their credit card, when you're ready to shop for home, it's the best time not to do that. So you don't want a lot of inquiries. It's okay if you shop lenders and you do mortgage credit reports, that's fine. But if you're having other reports done, that's when your score is going to start dropping. Now, if you do find anything that is inaccurate, you can dispute them. And again, I would do that in advance, because when we pull your credit, just when a account is in dispute, it could drop your credit score a little bit. And sometimes when we run them, it'll say that you need to take that out of dispute before we can proceed. And then with that, it's going to change your score. There is also non-traditional credit, such as rent, insurance, utility payments. I have seen in the past that people have asked their, say, electric company, gas company, to report that on their credit report. This way, if you don't have a lot of credit, this can help. But if you have enough credit, I wouldn't do that, because it also looks like a additional credit on there. Now, as far as getting pre-approved or pre-qualify, we typically don't pre-qualify, only because the seller is not really going to take you serious, your offer serious, if you're just pre-qualified, because it's not, we haven't run credit, we haven't really done much other than talk. So a pre-approval is more important at this time, and it doesn't take that long. We can take an application over the phone. You can do it on our website. We just need to pull credit, verify your income and assets, and we can issue you a pre-approval letter. So some of the criteria on the application is definitely going to be your credit score, also the assets, down payment, your employment history, which as far as employment history is, we do look for the last 2 years. It doesn't mean that you have to be at your job for the last 2 years. It can be in the same line of work. If for some reason you have switched jobs, a lot of times just a letter of explanation would be good enough for the underwriter. Also, for if you just graduated and you're just starting a job, that's fine too. We can just get a copy of maybe your diploma or your transcripts, and that would also be fine. Also, existing debt. Is your ratios too high? Can you afford this mortgage with the other debt that you have out there? So, I mean, if you have an opportunity to possibly bring your debt down before, it's a good idea. But you also don't want to use that money you have saved either. So sometimes it might be a good idea to get the application done, so we can kind of guide you what the best route is. But you also want to keep your score enough, so you do want to keep those credit card debt down. As far as locking in an interest rate, we do have locks up to 90 days, but we cannot lock in until you actually have a contract. So this way we know how much we're locking, the term, and sometimes maybe a 30, 40-day lock might be a little lower interest rate than a 90-day lock. You do not have to lock in as soon as you have a contract. You can float, which would just mean that we can watch rates, I can send you emails, let you know, and then when you want to lock, you can. The only problem with that is if the rates go up, we can't go back to those lower rates. So it's always, like right now, the experts are saying that it's so unpredictable. If you're comfortable with that rate, just lock it in. You'll also, once you get a contract, we will give you a loan estimate. And this will be a breakdown of your fees. It'll have, if you put earnest money down, it'll have your down payment, taxes, insurance. Everything will be broken down on this loan estimate, and it's pretty easy to read. They've made it a little bit better than some of the old documents, so it's pretty easy to read once you get the loan estimate. There are different types of mortgages. Most common is just a fixed rate mortgage, which just means you're locking in that rate for 10 years or 15 or 20 or 30. You can do a 25-year, but it's going to do the 30-year rate. So the 10, 15 are usually lower than the 20 or the 30 year, but payments are lower on the 30 year. There's also adjustable rates, which you don't see too many of them. The rates are so good right now that the adjustable aren't even as competitive. And also there's a little fear in those because people were taking them before to start out with a lower payment. And then all of a sudden these rates went up and their payments went up. So with an adjustable, if you say take a 5/1 arm, it's going to be fixed for the first 5 years. Then after that, it can adjust every year after. I'm not even quite sure if interest-only mortgages are still out there. We don't offer them. We don't even think they're a good idea. Yes, they will lower your monthly payment, but the problem with that is you're not putting anything towards principal. So your principal never goes down, your equity doesn't go up because you're only paying the interest on the mortgage. Those used to be a little more attractive a long time ago. It just seems like after the issues with just the housing and people are typically just going with the straight fixed rate. Some are going with the adjustable, but usually that's if they only plan on staying in their property for a short time. As far as closing costs, there's a whole list of them, and we don't know what they're going to be right away. We do have to wait for the title work to come in, which is ordered through the seller's attorney, so that we usually get maybe a couple of weeks before closing, and then that'll have a list of what the fees are, and that's a major part of your fees are going to be from the title company. You may have a loan origination fee. We do have an admin fee for our mortgages. It's $695. So one thing to shop around if you're looking at lenders, you want to see if there's any hidden fees. Do they have a lock fee? Do they have maybe name it just something else, an underwriting fee? So that it's always good when you're shopping lenders just to see what those typical fees are. Points, we don't charge points unless you want to lower your rate. You can always take a little bit lower rate and pay points. And that would depend on the pricing for that day. So that's something we'd have to kind of go over once you're ready if it's something that you're looking to do. But sometimes an eighth may only lower your payment by a few dollars, and it's going to take maybe a couple of years for you to recoup those funds, so it's not always worth it. Not many people do the points, but they still do. As far as the title search and insurance, again, that's going to be probably the highest part of these closing costs, and that is through the title company that is used that will do this closing and insure the title. Appraisal, just about every deal I have has needed an appraisal, and that is where we are going to see the credit union. We are going to see if everything is fine on the inside, because the appraiser is going to go in and take pictures of everything, make sure that there's nothing wrong, make sure it praises out for what you are paying for this property or more. So if for some reason that appraisal comes in less, you can always go back to the seller and see if they can lower the price. You can put more money down, or you can walk away. So having an attorney to make sure that everything in your contract is good, that you will get that money, you will get your earnest money back if for some reason this does not go through. A survey, we don't require a survey. You can have that done on your property. You can talk to your attorney about that. Also, recording fees, that's just through the title company, recording your mortgage, and if there's any other documents needed to be recorded. And then mortgage interest. So this is, normally you will pay interest on upfront from the day you close to the end of the month. So a lot of people like to tend to close towards the end of the month. You're still going to pay interest either on your mortgage or upfront. A lot of the title companies are busy towards the end of the month because of that reason. But it doesn't matter. Again, you're still going to have that interest. It just depends on if it's going to be on your mortgage or if you're going to see it on your closing disclosures. The components of a mortgage payment starts out with the principal and interest. So you're going to see, of course, at the beginning, you're going to see a lot going to interest and not as much going to principal. But as time goes by, there will be that middle point, and then you'll start seeing more towards principal and less towards interest. And you can always make additional payments to principal also. And if you are going to, if you don't put 20% down, you do need to escrow. So escrow would be your property taxes and your homeowner's insurance. If you put 20% down, you can pay them on your own. So how we will figure that out is whatever those are yearly, we're just going to divide them by 12, and that will be part of your mortgage payment. Private mortgage insurance, you will need that if you don't have 20% down. And what that does, it allows you to take out a mortgage with less than 20% down, but it insures the lender. So if something was to happen where we had to foreclose and you only had, say, 3% down or 5% down, we're going to take a huge loss, where this way the private mortgage insurance company will help make up some of that cost that we have. It depends on if you put, say, 3% down, you can do for first-time home buyers. Your private mortgage insurance will be a little bit higher. If you put 5%, a little bit lower, 10%, 15%, and then 20%, you will not even need it. As far as conventional financing, that will fall off after a certain amount of time. It might take anywhere from 5 to 10 years to fall off, depending on how much you put down, but it will automatically fall off after a certain amount of time. If in a couple of years you've been making extra payments and the value's gone up, you can always try to have that removed. We would just need to order an appraisal to make sure that you have at least 78%. Or you can always refinance it to get it removed too. If you are doing an FHA loan, they require 3.5% down. It doesn't matter if you put that down or if you put 20% down, you're going to have private mortgage insurance. And for FHA, at this time, it stays on for the life of the loan. So the only way to remove the private mortgage insurance is to refinance into a conventional. So there is different types of programs. There's VA. If you are a veteran, you can do a mortgage with 0% down. There is FHA, which is as little as 3.5% down. There is conventional, which we pretty much went over. We also do USDA, which is if you're buying in a rural area. We also work with IDA, which is a down payment assistance program. They have a few programs. You can always go to their website. It's ihdamortgage.org. And you would have to, it goes by your income to qualify. And like I said, they have different programs where they can help you with the down payment. Your credit score has to be at least 640 on that program. And there might be one that you like that you won't have to pay anything until you sell, and then you have to pay it back. There's one that you can pay 0 interest. So they have a few different programs if that's something you're interested in. I don't know if sorry, I wasn't sure if this is where Mary was jumping in. To find a real estate agent, you can ask for referrals from your family members, which is definitely a good idea because if they got a good service, it's probably the best way, especially or looking in your area. And Mary will cover more of that. You want to find an agent. Hello?
Oh, I said thank you, Sandy.
You know what? I don't know what page you're on, so I don't know where you're coming in.
I can jump in now if you'd like.
Okay. You know what? Go ahead, and then if it comes back to the mortgage side, I'll go back in.
Okay.
Thank you.
Thank you. Hi, everyone. This is Mary Summerville. I'm a local real estate broker, and I'm very happy to be part of this webinar, and thank you, First Northern Credit Union, for inviting me. Thank you, Sandy, for a really detailed explanation of the mortgage process. Today, even more than ever, it's important to get that mortgage process going before you start jumping into the market. When you're searching for a real estate agent, first of all, I want to say that using a buyer's broker doesn't cost a buyer anything. A buyer's agent gets paid through the listing agent. When a seller hires a broker to take a listing, they pay that broker a commission, and that commission includes the commission for the selling agent as well as the listing agent. So the listing agent offers us a cooperative commission to bring a buyer to their property. So there's really two sides of the fence when you're working in real estate. There's the listing agent side, and there's the buying agent side. And if you see on the screen, it says avoid using the seller's agent. And you're doing that, you're avoiding that because the seller's agent is working for the seller, and you want to have someone that is in your corner and working for you. So how you find a realtor, you can, again, ask for referrals from friends and family. You can find agents that are familiar with your area, do some research, who are top agents in the area you're looking in, do some comparison shopping. A lot of agents will go on sites like realtor.com or Zillow and do some research. You know, if you we're looking in, say, 60202 area code of Evanston, you'd want to go on and look at what agents have sold the most in that area, what kind of testimonials they have they had really good reviews. You want to see that people that have used them have been happy with them. And the fact that they've sold a lot in a particular zip code or area lets you feel comfortable that they know value in that neighborhood. You know, I couldn't sell without doing an awful lot of research going to like Hinsdale, because I don't know Hinsdale. And if you asked me to show you property in Hinsdale, I wouldn't really know what's a good value and what's not, if it's overpriced. You know, if it's in a floodplain, I'd have to do an awful lot of work and research to try to find all that information. So it's much better to get an agent that's familiar with the area that you're looking in. Next slide. And then consider what's affordable. You know, a lot of people will get pre-qualified, pre-approved, as Sandy said, and you may make a lot of money and you might be able to afford to spend, you know, a lot of money monthly on a mortgage, but you may not want to do that. That's called maxing out. You may not want to max out every dime of what you can afford to spend on a property, because then you start resenting the house and you're feeling cash poor if there's something you want to do to the house, or if there's, you know, repairs that are needed, and all of a sudden you find yourself feeling stressed out. So when you're looking, you want to budget for a property based on what you feel comfortable with spending a month. And then when you talk about that with your lender, they'll let you know if that falls in line with all of the other costs that are entailed. You've got to not only come up with your mortgage payment, you've got to pay property taxes, you've got to pay insurance, you've got to allow for maintenance. If it's a house, you've got to have gardening and water, and, you know, is there a homeowners association involved if you're buying a condo or in a development? So all of those fall into your housing costs. And, you know, if you're looking at, say, $3,000 a month, you've got to back into that loan payment by calculating what are the taxes a month, what's your insurance a month, and all of that to come up with a number that you feel comfortable with. And then you'll feel better about your purchase moving forward because you'll feel like you're buying within a comfort zone that you're not overdoing it. Decide what features you want. So I always tell my buyers there's take a piece of paper and draw a line down the middle and write out what your wish list is, and the other side write out what your needs are. Today, many buyers are being extremely conservative about what they're buying. If they need a 3-bedroom house, they're not buying a 5-bedroom house. A 5-bedroom house is going to cost more to heat, air condition, maintain. If you need 2 bathrooms, you may not want to buy a house with 3.5 bathrooms because, again, it's a lot more expensive to run that house every month. So make a list of your wishes, make a list of your wants. And it could be layout, like you may need a first floor bedroom. Perhaps you can't do stairs, or you have a family member that can't do stairs. First floor bedroom and full bath might be really not a wish. It's a must have. What style of house? Do you like older homes? Do you like mid-century homes? Do you want in layout? Do you need to be near trains? Do you need to be near transportation? Do you want access to outside? Do you want a deck or a backyard? If you want a certain location, I've always wanted to live near this park. Those are all wishes because you may find a perfect house and you might have to be willing to compromise on some of your wishes to satisfy your wants. So there's a lot of different types of houses. And when I sit down with a buyer, I ask them, what their lifestyle is. If, it's a busy single person or a couple without kids, maybe they want easy maintenance. They want a townhouse. They want a condominium. They don't want to deal with landscaping and exterior maintenance. They want all that covered. Or it's somebody moving out of a rental and they're like, our dream is to have our own single family and we can't wait to have a backyard and have grass. So there's a lot of different types of houses and you've got to match your housing style to your lifestyle and make sure that they gel and fit. There's, townhouses. There's 2 different types of townhouses. There's condominium townhouses that you're part of an association, and the association maintains the exterior, and you have very little input on, painting your front door purple. You can't do that. But it's nice because it's all maintained and it's all uniform. There's also townhouses that are called fee simple, which means you own your townhouse, you own the land, you own front and backyards, and you maintain those. And there may be a limited association as far as exterior look and maintenance, but there are some townhouses that have no controls, and you have to be concerned about that because you could move in and next door neighbor doesn't maintain their house or doesn't upkeep their property in the way that you maintain yours, and that would have an adverse effect on your value down the line. So if you're moving into a multifamily type of development, townhouses, you want to make sure that the building, the structure, the development is well maintained, not just the property you're looking at, but look at the entire development to see how it's maintained and how it's kept up. So when I start working with a buyer, I sit down and we go over your wish list, we go over your wants, and I then will start by going into the multiple listing service, which we call the MLS. The multiple listing service is a cooperative that all realtors have joined, and we have agreed that we put all of our listings, when I sign up a seller to sell their property, we have a certain amount of time that it has to go into this multiple listing service because it has to be available for all agents, buyers agents and sellers agents to look at. So I'm constantly checking the multiple listing service for my clients. I check it 3-4 times a day to see what's going on. In today's climate, we have a lot of different tools than the traditional MLS that we're using. There are properties that are not on the MLS that we have set up a notice to other brokers that perhaps I've listed this house, but I'm not activating it for the public to see. Only realtors could see it. That's called the private listing network. I check that every day for clients because there's things that are coming on there that aren't hitting the MLS for various reasons, but I want my buyer to know about it. We also have a site called Top Agent Network, and you have to be within the top 10% in the area in order to join this network. And that's a great tool for us because there are agents that are putting things on. I'm going to be listing this house in 2 weeks. Or I've got a buyer and they're looking in this area. Does anyone have anything that they're working on right now? Because my goal is to get my buyer in first. I want my buyer to have a chance at every property. Once it goes in the MLS, it then goes to hundreds of websites all over the place. The most popular ones, again, are Zillow and Realtor.com, Trulia, all the real estate companies, Coldwell Banker, Redfin, I'm at Dreamtown, all of us have our own websites, but all listings go to all websites, regardless of what company I work with. I have access to all the listings in the multiple listing. Susie over at this company has all the listings in the MLS, and they go into Zillow. The problem is, by the time they disseminate to these other websites, I may have already known about this through my private network for days or weeks ahead of time, and my buyer may have already been in and wrote an offer on it by the time you see it coming through one of these other sites. That's why it's so important to work with a broker that's on top of it and is looking out for you, because they're going to find that property before it hits the MLS. Today, because of COVID and the way we're showing and selling real estate is a way different way right now. I have just, on my listings, I've done videos on all of my properties, and we're showing our properties through video right now. If they're vacant, we can get buyers into vacant properties, but a lot of properties that are owner occupied, we cannot get in until the buyer has seen a video first. And why it's so important to be pre-approved is sellers will not let you in their house right now if they're living there if you don't have a pre-approval, because they don't want random public walking through their house and taking the risk that they're going to infect their families. So it's a new world out there, the way we're showing property and listing property. We're listing and showing property, some that I haven't stepped foot in, but we're showing them. I showed a property today, and we went in ahead of time. My sellers left. They turned all the lights on, opened all the doors. The front door was unlocked. We were by our car. The buyers show up, they go in, they're asked to wear a mask and gloves, not touch anything, walk through the house, and this is after they had seen the video. So again, you need to work with a broker that's knowledgeable and knows how to maneuver this new world we're in. You need to get that pre-approval in your hand, or you won't be able to walk through a property today. We're not having open houses. So again, there's no way for you to walk through an open house on Sunday. We are actually conducting virtual open houses on Facebook and on Instagram right now, and we're posting our YouTube videos of our house, and we're talking people through as we walk through our videos. So again, it's very important to be pre-approved, work with a good broker, and again, don't, on this list is don't be distracted by things that are easy to change. When I'm walking through a house with someone, I'm looking at a lot of things that you're not looking at. I'm looking at the condition of the windows. I'm opening and closing the windows. I'm looking up the ceiling to see if there's any cracks, if I see any water damage. I'm opening and closing doors to closets and bedrooms to see if they open and close easily, because that's telling me if there's some settlement and the house is sagging a bit and there's some there's been some deflection in the floors, and the doors aren't closing properly. There might be some settlement. I want to go down to the basement and see that. I'm checking to see if there's 2-prong outlets versus 3-prong outlets. That tells me that if it's 2-prong, the electric hasn't been updated in years, and that could be an expensive undertaking for a new buyer when they go to plug in that 3-prong high-end TV and find out they can't operate it on their 2-prong outlets. So there's a lot of things a broker is looking at while you're looking at pretty furniture or the layout. They may sometimes put a splashy kitchen in to divert your attention away from things that are really bad. Are there cracks in the basement that haven't been dealt with? Do I see any signs that there's been past water problems? Are the sidewalks and drainage draining towards the house versus away from the house? So as I'm walking through a house with someone, I'm pointing a lot of things out. I want to educate my buyers so that they feel comfortable and they've seen everything. And if once they decide on a house, they feel very comfortable that they've seen the good and the bad and the ugly about it. And that doesn't mean I'm a home inspector, but I'm prepping my buyer for that inspection. I don't want them to get all excited, make an offer, spend money on an inspection when I can see that there's things in this property that are not going to pass an inspection. When I'm working with a condominium, I also want to research the Condominium and Homeowners Association. I know a lot of the buildings around. I know the history on a lot of the buildings, but we go in and we'll ask the association for the last 2 years minutes. I want to hear what they're talking about, what the problems are. People coming to the meetings and are upset about various things in the building. I want to know about that. I want to see 2 years of financials. I want to see how well it's run. I want to know what kind of reserves. Is there enough money in a big building to do a roof? A new roof could cost, $600,000 on a big high-rise or more building. Do they have that kind of money, or will they operate on what they call special assessments? And, the board will all of a sudden feel like they've got to make this correction or change in the building and they don't have the funds, and they agree to do it, and they start what they call special assessing people. And you might get a notice that your condo is being assessed $20,000 for these repairs, and not everyone can come up with that kind of money in a matter of a month. So I want my buyers to buy in a good solid building, one that has done continuous ongoing maintenance, so they're not operating on by crisis, and that they've put money aside for long-term changes, and that the building is operating and there's not a lot of problems within the building itself. So once we find that wonderful property, the next thing we do is we do our research before we put in an offer. I'm just going to use some numbers just as an example. Say the list price is $400,000. Is that a good price or a bad price? You don't know that. I don't know that until I go in and do my research. So what I do is I go into this multiple listing service and I start doing research. I go back 12 months, I go back 24 months, I go back in a map location of the area. I go into an area by school district and I start searching properties that have the same components. Is it 3 bedrooms? Is it 2 baths? Is there a master bath? Does it have a garage? Does it have a basement? Has it been updated? Were they as is? Were they, hardship sales? I want to pull all of the information and data I can, and we go over all of these comparables. And if it looks like everything that has sold recently in that area nothing has sold over 350, and these people are asking 400, we want to understand where they're coming at with their list price, because to me they would seem overpriced and I would be worried that you're paying too much for the property, even though, as Sandy said, there will be an appraisal on it. But you don't want to get that far into a deal and find out that it's so overpriced that an appraiser is going to kill your purchase. We want to have a pretty good idea going into our offer that we know there's enough information and comparables to justify our purchase price. The next component, the big component of our offer, is the closing date. So typically when I'm writing an offer, I call the listing agent. I ask them if they've had any offers. What is the seller's situation? Are they moving out of the area? Are they downsizing? Are they selling? It could be a divorce. It could be an estate. Someone could have lost their job. I want to know a little bit and try to get as much information as I can from the listing agent about this, because that also helps me come up with what I think a good offering price is, which is different than the purchase price. What is the ideal closing date for the seller? And is it a date that we can meet? If they want to close in 30 days and you've got a lease for the next 60 days, are you willing to pay rent and mortgage to get this property? Because that also has an impact on what you're actually paying for the property. We also want to put an offer on the table and not just leave it there indefinitely, because listing agents are known to pick up the phone and call everyone that has shown it in the last couple of weeks and say, hey, I've got an offer. Are your people still interested in this property? Please hurry up and make an offer. So you want to give that seller a short time period, because you don't want to give them the opportunity to go around. We call it shopping our offer. So we don't want to do that. There are concessions that you can ask for in the contract. There is a place for a closing cost credit, which we can actually do. And sometimes if you need to stretch that down payment money, we can ask for a certain amount of closing costs that will help pay that, your lender fees and maybe some of your closing cost fees through the title company. There are, some people have asked for cash back. That isn't so popular anymore. Back a few years ago, people were getting cash back, but that's not something that we do today. There are situations when a property's been on the market for a long time and the seller is really, really wanting to sell it. They may even offer to prepay some of your homeowners. In a condo or a townhouse development, you're going to have homeowners association dues. And I know when I've had a seller, sometimes we've offered 6 months prepaid assessments. So those are nice things to have, because getting into a new place, you're not having to come up with those homeowner dues every month for the first few months. The other thing we're looking at is what stays with the property. We want to make sure that we're including everything and excluding things we don't want. I mean, the seller is going to take all their personal possessions, but are they leaving that wine fridge that you saw? Are they leaving the washer dryer that are brand new? The refrigerator, the stove, the dishwasher? How about that beautiful dining room light fixture? What about those beautiful pendants over the island? There seems like there's built-in bookcases or a desk in this little office room. Are those staying or leaving? And then you go down to the basement, and do they have, like great grandma's, giant freezer down there that you don't want? We may ask for that to be removed and excluded, even though they are going to try to leave it. We don't want that. So we have to be very clear on what is staying and what we want out of there. When we write an offer and it gets accepted, one of the things we do prior to closing is a final walkthrough, and we want to make sure that everything that is staying is there and everything that was supposed to be out of there is out of there. So when we're writing that offer, we're doing our purchase price, our closing date, what's included, what's excluded, if we're asking for any concessions, and then pre-printed in the contract is usually a 5 business day time period for a home inspection, 5 business days, the same 5 business days for an attorney review. We'll put in a certain number of days for financing, 30, 45 days for financing, and that it's subject to an appraisal. Next. So when we make that offer, we present it to the listing agent. The seller goes and the listing agent talk about it, and they'll usually come back to us and give us a counter offer. I forgot to mention when we're writing the offer, another important part that I always ask is how much earnest money do you have available to put up? Typically, a lot of people, when they write their offer, you need to write a check for $1,000 to show that you're sincere about the offer. If that contract is accepted, that $1,000 check is deposited, and this is called earnest money, that you're in earnest about this deal, and you're giving them $1,000 that goes in an escrow in your name, nobody can touch it, waiting to close. So it's part of your down payment. After satisfaction of the inspection and attorney review, there is usually a second earnest money amount that has to be submitted, and typically it can be up to even 5% of purchase price. Most, you can see 3%, 5%. Some people will just give a flat amount. They might say, I'm giving you $10,000 or I'm giving you $15,000. It's got to be a goodly amount so that the seller feels like, I'm taking my house off the market for 30, 45, 60 days for you, and I need to trust that you're going to do what you said you're going to do, which is close on this property. And if for some reason you default, you don't do what you said you're doing, the seller is going to get that earnest money. So you don't want to do anything to default on a loan, which means the minute your offer is accepted, that earnest money gets, they call it solid, hard, gets put in that escrow account. You have that money at risk. You immediately start your inspection time, your attorney time. If during that period it's a no-go, you decided you don't want to buy the house, it's not in the condition that you thought, you get that initial earnest money back. But once the attorney and inspection is satisfied, you've brought in that balance of earnest money. The only contingency you have standing at that point is your mortgage. And your mortgage is being processed. If your lender says you're good to go and your appraisal comes in and you decide at the 11th hour you don't want to close, your earnest money is at risk. So once an offer is accepted, that's a binding contract, and it's agreement between you and the seller that you're both doing what you agreed to do. The seller is agreeing perhaps to make some of the repairs you asked for during the inspection. He's promising to get out of the house, have it broom cleaned and prepared for closing and walkthrough for you. And at the same time, you're doing your due diligence, getting everything to the lender that they're asking for in order to process that loan and get that loan satisfied. So, which is why if you do a lot of the work up front with Sandy, your mortgage process is a lot easier because you've given her so much of the stuff that she needs in advance, and she's just waiting for a contract and an appraisal, and she can process the rest of it pretty quickly. So again, we're going to have that home inspection. We're going to re-inspect, if informally. You don't have an inspector back right before closing, but we will have a final walkthrough, usually 24 to 48 hours before closing. While this is going on, you're periodically checking with the lender. I am also checking with the lender to see how things are going. If there's anything I need to do I need to give you a little nudge, like you didn't get these bank statements to them, or you didn't get them, proof of your work from your, employer, stuff like that. You've got to get your homeowner's insurance lined up. Don't go out in the middle of all this and decide to celebrate and buy a car, because I've told people, congratulations, you're going to end up living in your car because now you can't afford to buy a house. So don't take on any additional debt. Don't, like, oh, I'm going to buy that big screen TV, or I'm buying that giant family room, video couch for, family of 12 and take out all this debt. Don't buy anything until after closing. So then your attorney is also going to be working on all of this through for you as well. And they usually are the ones that will negotiate the inspection items. If we have things that show up during an inspection, we all will powwow on the best way to present that to the homeowners. And then that attorney is going to go over with you how you're going to take your title. Are you going to take a tenancy entirety? That's usually for a married couple, especially if you're business owners or individual business. If one party got sued, they can't go after the house because the way it's held in title, you're protected as a married couple. Joint tenancy could be two not related people. No, joint tenancy is, just two people. Tenancy in common is like if I decided to buy a property with a friend, say a 2-flat investment property, and we each owned 50% of it, we each don't own 100% total. Joint tenancy, we each own 100%. And if one of us were to die, the other person would automatically inherit the other person's percent of ownership. Tenancy in common, if we each own 50% of a 2-flat and one of us died, our heirs then own the 50%, and you then would be owners with the heir of that person that deceased. And again, do your final walkthrough. That's very important. You don't want to show up and find out that the heat's been turned off, there's pipes damaged in the winter. We make sure all of the utilities are transferred over and that you've got a nice, clean, fresh property to walk into. I always say check the hot water. The last thing you want to do is be exhausted after you've moved in and want to take a nice hot shower and find out your water's not working. So there's a lot of moving parts, and I know sometimes it sounds overwhelming, but just know if you've got a really good team working for you, it's fun. You want to enjoy this process. It's exciting, especially if it's first-time home ownership. It's a lot of fun looking at properties and educating yourself and feeling good about, what you're buying. So, just know that if you've got a good lender and a good broker working for you, it's going to make it a lot easier. The day of the closing is also kind of crazy these days. Um, you'll get all your closing disclosures, like what you need to bring, the balance of earnest money. Say you're putting 5% down on a, or 10% down on a 400,000 that is $20,000. You've put only 15,000 as earnest money. You've got to bring the balance of your down payment up, and whatever costs are usually wired to the title company in order to close. Your lender will send the mortgage, their 80%. You've got to come up with that 20%, of which some of that is your earnest money. And then that all gets broken out. Today, we're doing virtual closings. We're doing drive-by closings, actually. So you would have a really good attorney, which is the third leg of that stool. And the attorney will go over stuff. You're going to go over the mortgage and note, the closing disclosure, breaking out everything to make sure there's no hidden fees or costs that you weren't counting on, that you're getting your credits for taxes. They're going to make sure that that title is clear and there's no straggling person that owns a percent of that property that you're going to find out later. That's why you have title insurance. And then it's closing time. You're going to pre-sign everything. It gets all moved around at the title company, and the next thing you know, you've got keys in your hands. So tax benefits of home ownership. So the nice thing is when you're renting a property, you're paying rent every month, and none of that is tax deductible. When you're paying down a house, first of all, your closing costs are tax deductible. So what you've paid to get a loan, your attorney, your inspection, all your closing costs, those are all tax deductible off of that year that your purchase took place. You also can deduct mortgage interest. You can deduct property taxes. You can deduct if you're paying private mortgage insurance, which means you put less than 20% down. The lender will require an additional insurance policy on that mortgage. And any points you've paid are all tax deductible. So, if you're unhappy with how much you pay the IRS every year, once you own a property, you'll see your tax bill go down because a lot of the things, your living costs, are tax deductible as far as home ownership. And it's a great way to actually offset. If you look at the actual cost per month, if you calculate your tax savings, it really makes your monthly cost go down compared to renting. Thank you all.
Okay, and this is Pete. Thank you. That's quite a lot of information that we covered. In the meantime, we did receive some questions, a number of them. So let's get at it. And I think I will start with you, Mary.
Okay.
It sounds like I'm just going to read the question, okay? It sounds like a good idea to see videos before you go in, regardless of the situation now with COVID. Do you think that's a good idea anyway?
Yes. It helps you limit your running around. It never takes the place of the actual walk, but if it's a property you're interested, I would drive by it, make sure you like the location, like it's not sitting next to a garbage dump or, some really loud office, commercial space, that you like the street, you like the location, it has an interest for you, it's close to what your likes are. So it's good to see the location. That's first step. And then ask to see the video. And then if you like the video, then ask to do an actual walkthrough of the property.
Perfect. Along the same lines, well, not really, but what is your opinion on using Zillow and Trulia and Redfin in regards to selling price? Are they usually in the ballpark, or is it really not to be trusted?
It can't be trusted. I mean, Zillow has a Zestimate, and it makes our hair go on fire when we see it. It is not accurate, probably 70% of the time, because what they do is they just take a blanket area and do an average, and somehow they come up with it. There could be a house that was 200,000 and a house for 800,000, and they're going to say this house is worth 600. And they're averaging things, based on area pricing. But in our area, that doesn't work because every house is so unique. They don't know if there's been an addition on a house. They don't know if that house was a tear down and it's a brand new construction house. They don't know if the house has been destroyed and it's, should be worth 200, and as estimate says it's worth 400. So it's not accurate. What you want to do is what I said a broker does. They sit down and they go through and analyze everything in that neighborhood, everything in that area. They go block by block and try to find as close to matches as they can for that property. And you don't want to go back too far because an appraiser is only going to go back 6 months. I may be going back a year or 2 years, so I get a feel for the value in the neighborhood, but then I start narrowing it down and wanting to get a tighter time frame so that I know what's happening right now. Because today, as we all know, we're in a different market than we were even in January and February. So what happened, if I go back 6 months, we're talking about a totally different market at the beginning of the year that might be skewing the value right now. And
Gotcha. Okay.
those computer algorithms don't take in the knowledge that the brokers on the ground have. And you don't want to end up overpaying because, it was an out of area broker that listed it. You saw it on Zillow and nobody gave you that really boots on the ground information, and you might end up overpaying.
Sure. Okay. Makes sense. And along the same line here, do you have to be talking about comps? Do you have to be an agent to have access to the MLS?
Yes.
Okay, that was simple. And does a buyer have to sign an agreement with a real estate agent, or is that just for the seller?
Well, there are agents that want a buyer to sign an exclusive buyer's agency agreement. I don't do that. I feel like I usually have a meeting with a buyer and say, let's talk about, let me tell you how I work. You tell me a little bit about you. Let's see if we're a good fit. I might not be a good fit for everyone, and you want to work with someone that you feel you can trust, you can talk freely with, that is totally looking out for you, and you don't want to get hemmed into someone that you may have thought, oh, I met them at an open house and they seem nice and I signed this agreement and now I'm trapped because I don't like them or they're not doing what they told me they were going to do. And they've really kind of violated our agency agreement, but I'm trapped in this contract. And if you go to work with another agent, so you fired them, you go to another agent, then it causes all kinds of problems because that broker could be going after you for a commission that they didn't earn. I feel like in this business, if you don't like me, you tell me, and then you work with somebody you like. And the same for me. If we're not getting along or for some reason we're just not seeing eye to eye, I don't want you to feel trapped working with me. It's a very intense relationship for, could be 2, 3, 4 months, you don't know, and it's extremely intense. And I want people to know that I'm doing it because I care about them and I want them to get the very best property I can get for them. I don't want them to feel like I'm working for them because I've got them trapped into an agreement.
Okay. All right, great. And I think I'm going to go to Sandy right now. Here's a straightforward question, Sandy. How low are 30-year fixed mortgage rates right now?
So the rates, they do change daily, and they do depend on the loan amount. They depend on the down payment, your credit score, the type of property. There's so much involved in it, but just today, the couple I priced out, they were at 3%. So that's really good. The
Wow,
15,
okay.
I priced out one at 2.5. So yeah, they're still really, really good.
Wow, okay. I have another question for you. How long is a pre-approval letter good for?
They are good for 4 months, but I'm sure Mary would also say that usually the realtors, the listing agents, the sellers don't want to see something that's 3.5 months old. So usually it's just, we only have to pull credit once within that 4 months, but we can always verify other things and update your pre-approval at any time during that process.
Okay, perfect. And I think this is the last question. Explain PMI, please. You don't need it if you don't need it if you put at least 20% down.
Correct. So
Right.
we've been doing a few of these lately, and I get a question on PMI each time. So correct, you do not need to have private mortgage insurance if you put 20% down. Anything less, you would. And actually, there's different types of private mortgage insurance also, where you could do that the monthly. You could also pay it all up front, or you could do lender paid private mortgage insurance where your rate will be higher. But usually we find out that the best deal is just to do the monthly, because at some time it's going to fall off, or you may sell earlier and you may not need it for the full term. But yes, if you do not have 20% down, the lender will require private mortgage insurance. And again, it allows you to buy without 20% down, but it's insuring the lender. So it's not insuring, it's insuring the lender. Hope that helps.
Okay, perfect. And
Can I add something about PMI?
Of course.
The other thing about PMI, again, it's a great way to get into a mortgage with less than 20% down. And some people are perhaps saving that money to do work on the house. Maybe they're putting in a new kitchen, adding a bathroom, doing a family room, finishing the basement. And they can actually affect the value of the property and go back later and either do a refi or have it reevaluated, because it may show down the line that they do have 20% value in it when the value of the property changes by the work they did to it.
Okay. All right, perfect. And on that note, we're going to wrap this up. I hope everyone is walking away with a lot of new information. There was quite a bit of information that was shared. It could be confusing sometimes. I will send everyone a handout with all the information we covered tonight. in an email tomorrow. I'll send that out tomorrow. And I will include contact information for Sandy and Mary if you want to ask them any questions in the future. Take advantage of their expertise is what I say. And I want to personally thank Sandy and our special guest, Mary Summerville. Thank you very much. And with that, I wish everyone positive energy and stay healthy. And we wish everyone the best. And we thank you for joining us this evening. Thank you, everyone. Have a great evening. Bye-bye.
Thanks, Pete. Bye.
Thank you.
You're welcome. Thank you.